Hello, everybody. It is the 1st of April 2011. Welcome to today's Silver Log and the silver analysis. The market's down today, a little over 1% as of the recording of this video. It is roughly a little after 10 a.m. Eastern Time. When tuning into CNBC, they were stating the reason why the metals are down is because of strength in the US dollar. No, this is no April Fool's joke. No, this is a many days of the year joke, stating that because of the US currency having more value today than the previous day against the other currencies, well, that's the reason gold and silver is down. A lot of times they just pick a little bit of a little reason that they want to out of a hat, and well, it's up to you if you want to believe it or not. Let's move on to what the technical state, and it's been mainly a range bound market. It's a week and a half now, going sideways, mainly between 36 and a half and 38. If you look at the sizes of these daily moves in comparison to previous days, the volatility is not there. I'll talk more over the weekend about the lack of the volatility or the previous volatility in the past and signs to show when it just might be coming into another higher level. Let's now talk about trend line analysis. The key trend line that I've been using for the last month or so has been this one. It's been holding this area for support for the last week, not able to make a run above it, but at the same point, still able to hold the trend line. If we take a little bit of a parallel line, something in the area of this and here, then this has been the main trend that we've been trading in, with a few pierces above, few pierces below. But overall, it's in an upward trend. And until we can have a clear breakdown below, which might be coming soon, then the intermediate trend will remain higher. And on a breakdown, I would be expecting a move of 38.2% from this low to this high. That's, of course, if this happens. Now, I don't think it will, but if it does break down, that's what I'd be looking towards. Moving on to the hourly chart. This represents the time frames from the 14th of March to now, and it's been mainly choppy over the last little while, and that's part of this range bound market that we've been seeing. This here would be a look at the range from 3650 to 38. It's now had many tests within this 5-day moving average. 1, 2, 3, 4. It still hasn't been able to make new highs, and therefore the market's really correcting through time, and we still can correct a significant longer of a period of time because of this 20-day moving average. The 20-day moving average is rising, and if the market continues to correct for the next week or two, then what would happen is this moving average would move within the range and then start to trade sideways, and then the markets would continue to have some boring action. As far as some key trend lines are concerned, whether you use this trend line, I think this is the key one. This one has been broken. We could see another leg lower. We'll just have to wait and see. If we draw the length, or if we calculate the length from one trend to the next to give us a downside target, if of course we continue to go lower, we just draw the line so it's equal. Then this could give us a price objective towards possibly this trend line in here. If, of course, this 5-day moving average does give in. Within the purple lines, which are the Fibonacci retracement, connecting the lows from in here and the highs from in here, It's had one successful support test on it thus far. Coming back down would be the second test of this level. More often support is tested, more likely it is to be taken out. Therefore, if it can remain above this purple line, and it has the entire time since it's made the high, that would mean that from this breakout period low of the 15th of March, that it's still in a bullish uptrend. If it goes between these two purple lines, that would relatively mean it's neutral, and below here is bearish, and a break or a confirmation below this level, which is around 35 and a quarter, 35.30. Then that means that the rally that occurred at the end of March would be that of a failure. It still is not that, but overall, very, very neutral. Thank you for watching and have yourself a great day. Bye bye.